Europe has a lot of wealth, but they never invested in startups really actively. But I see something changing in the last 2, 3 years.
I'm into VC and angel investing since 6 years now. We have 18 investments made so far. We usually do checks between 50 and 100K. I grew up in a really small village in Tyrol. It was a great place to grow up, but for me it was just too small at some time.
The most interesting thing about Indian economy at this position in the world is that right now India is the fifth largest economy globally at $4 trillion. And in the next 3 years, India is going to surpass Japan and Germany to become the third largest global economy after US and China. To any European investor that is listening to our conversation, that if you are allocating $100, please allocate 10 to 15% of that to India, because you will see that grow the fastest over a 10 to 15 year period of time. Why at ROI Ventures you are only focused on B2B SaaS, whereas the largest case studies which have come out of Europe are the B2C companies?
B2B is quite interesting for us because
Hi, this is Siddharth Aluwalia. Welcome to the Neon Show. I'm your host and also co-founder of Neon Fund, a B2B SaaS fund that invests in the most enterprising B2B SaaS companies that are coming out of India and are building for the globe. Today, I have with me Laura from ROI Ventures. It's an angel fund based out of Europe, and they are known for investing in B2B SaaS in Europe and now globally also. Laura is an Austrian, and now, Laura, welcome to the podcast. So excited to have you on the show with us.
thank you so much for the invitation. Happy to be here.
Laura, for our audience, would like to start by, the introduction about the ROI Ventures team and what is ROI Ventures and the history of ROI Ventures.
Yeah, definitely. Happy to start a little with our history and why we started ROI Ventures. I'm basically into VC and angel investing since 6 years now. I've started out at the Deep Tech Fund in Austria first, and then for the past 3 years, I was managing the Austrian network for business angels. So we ended up having over 300 angels and also VC funds within our network. And I thought, okay, what's the next step now? I have quite some knowledge when it comes to investing, have quite a good network. So 2 years ago, me, my husband, and two close friends of us, we've started ROI Ventures. It's basically a micro multifamily office where we just put our funds together, and we started to do angel investments in a professional and also in a joint way. And we have 18 investments made so far. We usually do checks between 50 and 100K, and we look for outstanding founders. So we invest quite early in the founders' journey. We don't need revenue, we don't need any traction. It's really founder driven, and we like to come in super early. And we like typical angel investors.
And can you tell us more about your thesis and your portfolio split between uh, the first is uh, in Austria across Europe, and how much outside Europe, both across companies as well as funds?
Yeah, the most important point of our thesis is that we like to come in quite early. So early means under 5 million valuation. That's like a cap we have given ourselves to really find people really, really early at the journey. So it's also fine for us if a founder is just starting out, still looking for a co-founder, just having the idea of starting a business. So this is really important for us, and this also narrowing down the startups we are interested in. So we thought like we need to have a quite broad focus, and that's why we focused on B2B SaaS. B2B is quite interesting for us because we have a lot of contact and network in Austria when it comes to corporate clients, when it comes to bank, insurance companies, manufacturers. And Austria is quite often also the next country which is interesting, for example, for German startups to enter, for Swiss startups to enter. So we thought, okay, if we can focus on B2B startups and also invest outside Austria, this can provide a lot of value for everybody if we can create access to corporate clients. So that's why we started to do B2B. And our usual ticket size is 50 to 100K, and we like to invest quite a lot. So we do 10 to 15 investments a year with the goal of building a quite diversified portfolio. As I said, we're quite opportunistic. What we're not investing in is health, also not digital health, just because we're a small team, and in the end it's just a lot to focus on at the same time, and we also want to find the best talent in their spaces.
Got it. And the all four partners, including you, are full time in ROI Ventures right now.
No, I would say we have like a split that me and Niklas, we are both like doing this full time, and the three others, they support a lot strategically, and we also in touch a lot, so they're definitely more than an LP. But like Niklas and me, I would say we're in charge of most of the things.
Got it. And can you tell us more about your own background and about the other founders of Roy Ventures, just for our audience to know you as a person more before we dive deep into, the ecosystem in Europe and how do you think about the ecosystem in India?
Yeah, definitely. I grew up in a really small village in Tyrol. This is like the more, I would say, mountain-based parts in the Alps of Tyrol. So if you have ever been skiing or if you're thinking about skiing, that's usually where you should go to. It was a great place to grow up, but for me, it was just too small at some time. So after I've been finishing studying business, and did my bachelor, I wanted to go in a bigger city, and Vienna is the only big city we have in Austria. So this was quite the place to go for me then. And also, as I said in the beginning, and this was also my entry in the VC world, because in Vienna I did an internship at a deep tech VC fund, and this was kind of the moment for the first time when I realized, okay, this is super exciting. I can get to work with like really motivated, engaged founders every day. I can really do something really fulfilling and be really driven in doing it. So that's also why I found investing into startups so fascinating. And I really wanted to stick onto this. And a couple of years later, I got the opportunity to lead the network for business angels. And this was also a really great opportunity for me, because my job was basically to do networking for 3 years, which is quite helpful when you also want to invest in startups yourself at one point, because also we see it now the biggest asset we have, but also when it comes to deal access and also when it comes to supporting our founders, is that big network I've also built during the time I was leading the angel network. And I feel like it's really worth to spend time building a good network as an angel investor.
And how did you and Marco meet? That would be a very interesting story.
Yeah, we met really, really early actually. I was just 15 and Marco was 17. We did an internship like we both were still in school, and we met at the like summer internship where you could like work a little being still in school. So it was quite funny. So we have been together for 10 years now already, married since 1 year and working together since 2 years. So it's also quite fun to do this together with my husband and also the other partners. They're really close friends of us. So we really know each other really well. I've met Niklas during my time at the Angel Network, and Julian and Patrick, they both were close friends of Marco already, because they also have met quite early ago, and it was just a really nice experience to like bring all of us together. It was not us randomly starting a business. It felt quite natural. Like we were talking a lot about venture and startups already, and it was just a kind of logical next step for us to start ROI Ventures.
And can you tell us more about the current portfolio? Like how many companies, how many funds you are LPs in, and if you can name some of the top portfolio and what are the regions they are in?
Yes, we have focused a lot on the last years to do direct investments into startups, and we've also started to invest in funds this year, basically. So on our direct investment side, we have 18 portfolio companies now, mostly based, I would say, in Germany, Austria, and Swiss, because that's also the areas where we have the strongest network in. We have a couple of portfolio companies now in Spain, UK, and Sweden as well. So we're also trying to go a little broader when it comes to European direct investment. And we also figured out we want to diversify more, because we can like invest in Europe ourselves, but we would also be quite interested to invest, for example, in the US, to invest in other countries like India. And then we thought about our VC investment strategy. And this is also basically the reason why we met, right? Because we were looking into the Indian market and about the most exciting VC funds, and you don't need to look too long to find Neon. So it was kind of a really good fit for us, because we were super interested in other ecosystems, also in terms of diversification. and we could never invest in India ourselves. It's just too complex. We don't have the relationships. We can't assess the founders, and it's such a personal network driven game in the end. So that's basically the reason why we thought, okay, let's look into funds where we can diversify outside of Europe.
No, thank you so much, and super grateful for the partnership, and I've really enjoyed our time working together.
Yeah, that's really been fun.
Uh, so Laura, help us understand, the European startup ecosystem, right? What are the pros? What are the cons?
Yeah, I was thinking about this question actually, and it's quite hard to see all of Europe being one ecosystem. Actually, you could see the US, and I hope also India as being one ecosystem, but Europe is definitely like quite fragmented. So there are a lot of different markets, different ecosystems. You have a lot of different currency. You have languages. So it's quite tough to see Europe as one ecosystem, and also for startups is definitely also more difficult to scale faster because you need to market expansion is a big topic as a scale up. But I would say different hubs have emerged. We have three, I would say, quite big hubs nowadays, which is UK. I mean, UK was for a long time the capital of finance and also the location of most of the bigger VC funds. Still, like I would say, there are less startups now which found and go to the UK to found their startup, but there's still like a lot of VC funds, especially later stage funds based in the UK. We have Berlin as also a big hub for customer faced startups and also VCs. I would say, yeah, this is the most crowded and also most dynamic place, especially in the DACH region when it comes to startup investing from VC side and from the venture side. And there's also Paris, which is emerging quite a lot because also France is a big country itself. And this is also quite important when you want to become a startup hub, that your own country in Europe is quite a good market as like in its own. For example, Austria is not a good hub because the country itself is just a little small that you can say, okay, I do choose Austria for now and then I go to other markets. So this is basically the reason why Germany, France, and UK also being the countries with the most economic activity being also the most interesting hubs when it comes to startups.
So just to summarize, right? So you mentioned 3 to 4 hubs. The largest one is UK, definitely, right? Uh, then people look up to Germany, right, which is by far, I believe, has the highest number of startups in Europe, and then come other regions. Uh, so for a founder in Austria, do they sit in Austria and build for the world, or they, in the beginning years only, they migrate to more developed regions like Germany or other parts of Europe?
Yeah, there is one really big advantage, and I think that's something Austria has done really well. You can get a lot of public grants if you start your business in Austria. So you don't need to worry about like you being able to finance your life, for example, in the first 1 or 2 years, because there's so much government support. And I think this is the reason why, if you're Austrian, it definitely makes sense to start your business in Austria. Maybe if you grow and at a certain point you think about adding other legal entities, but most Austrian definitely also start businesses in Austria. I mean, there are always a couple of, if, for example, if you build a consumer business, maybe it makes sense to directly go to Germany, or if you do something in gaming or heavy finance, maybe you want to go to London right away. But like most founders I know, they start in Austria, and this is also an advantage in the beginning. And also, it's easier to become one of the best startups if you start out in a small country, right? Like it's super hard to be in the top league in Germany, I guess also in India, but in Austria, there's just not too many. So if you're good, everybody will recognize you really fast. And I think this also helps you a lot from the investor side and also from the international recognition side, and can also like help you get started a lot. And I'm also not a huge fan of overcomplicating everything. It's so hard to build a startup. It's so realistic that you can fail. Please just get started and start in your home country if it makes sense, of course. And then if you're in the phase of scaling up and it's working out, you can still think about where you want to go next, also from a legal entity perspective.
And which would be the best success stories in startups from Austria today?
Yeah, we have two really big unicorns in Austria. One is called Go Student. It's a tutoring app. So for pupils who need to have tutoring to do that online, they got a really big push during COVID because there was not too much online offering at that time. And the second one is Bitpanda. It's a crypto exchange platform. And I think these two examples are quite interesting because Austria was never meant to be a hub for like crypto startups or education startups. We would be really good in science, in biotech, for example, in like deep tech focused industries. And I find it quite interesting that like the two most successful startups, they like in finance and in education, which also shows it's like a lot about the founder driven side and not too much about the ecosystem where and with which topic you can actually become successful. And I think with both cases it was a lot about timing because we had with Go Student being a really big push, and also we had like the crypto markets going up at that time for Bitpanda, which also gave them a quite good advantage. And now a lot of other players died or had quite big difficulties in the meantime, and crypto markets are starting going up again. So they're definitely in a really good position now.
And how is the B2B SaaS ecosystem in Austria right now?
Yeah, I think in Europe we do a lot, which is deep tech, a little bit hardware, and SaaS. I would say 80% of all startups you see, they would be fitting into the SaaS category. And we also see that in Austria, we see that in Germany. And I think we see, and also we as investors like it a lot because it's super scalable. It was quite easy to build a really big company, also with low costs on the employee side, for example, in the past years. But we also see a big shift now because there is so much being automated already. There's so much software for everything. If you're a corporate or also SME, like you can use so many tools already. There are tools to show you which tools you need to use or help you to implement the tools, or just having APIs to include all that tools. So we also, I feel like, see a shift now, being looking for more sophisticated startups, like now already like more technical startups, because it's quite hard to do differentiation as a SaaS business. So I will say like deep tech and also more hardware investments. I definitely also see that coming for this year and also the next years.
And any large successful B2B SaaS startups that have come out of Austria or of Europe?
Yeah, I mean, like the two I just mentioned, Bitpanda and Go Student, they are basically, I mean, I would say they mix between a marketplace and a SaaS business. And we just had one really big financing round. The startup is called People. It's a translation, writing, optimization tool utilizing AI, of course. And they just raised 300 million and announced that last week. So they have a 2 billion valuation now. So I would say that was the most recent unicorn announcement and big funding rounds also we have seen in Europe.
And how is the seed, Series A and Series B ecosystem in Austria and in overall Europe?
What ecosystem?
The seed ecosystem. That which I'm asking is, are there enough seed investors and then Series A and Series B investors?
Yeah, I mean, I must say the European startup ecosystem is quite young. So it basically started 20 years ago, and I would say since 10 years we have a lot of like activities incoming, and it's just a little behind when you compare it to US, where just the ecosystem has been existing for longer. And also most people who have made a fortune in Europe, they have made it out of traditional businesses and not out of ventures. So it's also a different story when it comes to the LP side, which also makes it harder to raise really big funds in Europe. So we've seen a lot of pre-seed and seed funds. So it's definitely like there are a lot of out there because it's also easier to raise a smaller fund, of course. But what we really lack are later stage, like really big later stage funds. Also, like it's basically starting at Series A, B, that you need to go to a US fund basically if you want to raise really large sums, because there's just not a lot of options in Europe. But I also think this will keep on evolving and keep on changing, and more people will add later stage funds to their fund portfolio, or also like start raising new later stage funds. It's more about like the capital and also the LP side where we struggle more with.
And and do you see that there's sufficient ecosystem in Europe for large exits? Like companies can go public in Europe for the ultimate exits to happen.
Yeah, we haven't seen a lot of companies going public. I don't know how this is in India, but I think that's not a too realistic way, especially when being a B2B company. I see also IPOs being more realistic for B2C companies in general because you just have put a lot of time in building the brand, which helps you a lot with then also selling the stock and doing the IPO. So what's more realistic now are definitely M&A cases. So we've seen this a lot, which is private equity firms buying a majority stake. And we see a more active secondary market now, which is quite interesting for angels when it comes to exit opportunities. So it wasn't that common that it was possible for angels to sell. But we also see more secondary funds also entering Europe, and this also provides more liquidity because we had quite a situation where it was quite hard for VC funds to exit their current portfolio, which put a lot of pressure on them because LPs wanted to have the money back, and we have seen really little exit dynamics in the past 2 years. And some companies also have waited to sell for a long time and be neglected a lot of opportunities a couple of years ago, right? When there was a quite good market timing. So I think we've definitely also made some learnings when it comes to exit opportunities that they're quite rare. And also we at ROI Ventures, we are also quite open looking into secondary opportunities in general for us as an exit strategy. I mean, we're quite new when it comes to investing because we just have started 2 years ago and we made a majority of our investments last year. So I think we definitely need to wait another 2, 3, 4 years. But whenever we have a company going to a Series A round or also to a later stage round, we would definitely think about selling our shares because we own really little equity as we just invest 50 to 100K checks. There's also dilution in between. So as an angel investor, it definitely makes sense to exit maybe as a later round. And it's also not too bad in terms of signaling because if you're a VC investor or a bigger investor, you can't leave the round because it's just looking like you're not a believer anymore. We don't face that issue so much because we're just a small investor and everybody understands if we just need liquidity at one point again.
Yeah. But you have, I think, great case studies from your portfolio. Tell us about your top three portfolio companies and their journeys, right?
Yeah, definitely. I would say the most successful and also most well-known startup in our portfolio is called Magic. The founders are Austrian, but they always had a US entity, and they were on a really, really big mission. They wanted to develop an own AI who writes code basically to substitute developers long term, or at least help them a lot. And this was a really big mission, and it's just also super heavy deep dive startup made out of Austria. And we got to know the founder really early, and we've invested 2 years ago, and it just raised over 100 million US dollars beginning of this year. So it's quite a success story, and we're quite happy backers of the startup.
Congratulations. That's a fantastic success story. That too, such early in your journey.
Yeah, I mean, it's a lot about timing, right? I feel like it definitely helps us now a lot to have such a success story in a portfolio, but you can't do so much as an investor. Sometimes it's just taking longer, sometimes it's taking less time, but we definitely got a little lucky in this case with this shop. And the second one we also like a lot is a company called GateSpace. They are a deep tech startup. They also develop their own hardware. Also an Austrian team, also having a US entity now. But they basically develop a system for autonomous driving for satellites so that they don't crash into each other. And it's also possible to recycle them after they have been being used for a long time. And it's quite interesting because they had a quite hard time fundraising in the European market because European investors are a little conservative. So they went to the US, super successful there. Also when it comes to the client side. So I would say also a quite good success story made in Austria, and hope we have a lot of news coming from this portfolio startup in the next couple of years.
Yeah. And uh, what were your learnings? Right, you have done 18 direct investments in the last 24 months. How has your thesis evolved, and what are your learnings on picking the right founders and avoiding avoiding the even the good founders, but and finding the green and red signals during the process of due diligence and investment?
I think like the biggest learning was, I mean, I had experience with investing other people's money already, but it's a different story if you invest your own money because you've worked a lot and really hard to be in that position. And you also don't have investment pressure. Like we don't need to invest if we don't make any other investment in this year because we didn't find anything which is too fascinating to us. It's completely fine. So I would say the first couple of months we just struggle a lot with get started because we were really critical. And then at one point, we just needed to make our first investment just to get started and get into a routine. So I think this is also something a lot of investors struggle with, just get started, especially being a private angel investor. You just need to like try it out and also invest in a lot of startups later on. But like the first one is really important, just get you out there in the market. And the second learnings around the thesis was we always wanted to invest in founders really, really early in their journey, but we just didn't see any opportunities when we got started because we shared a lot of deals with other angels and VC funds. And most of the startups we've shared, they were, I would say, late pre-seed, like raising 1.5 to 2 million already. And this was kind of too late for us, but we didn't know how to get to the founders earlier. So we needed to develop quite a lot of strategy and also effort into getting the founders and also having them seeing us. So we started to do more on, I would say, I started to do more on the personal branding side. We started to do more on the fund branding side. And I also got part of a couple of founder communities. For example, I'm part of Sigma Squared, which is a really great international founders community. We also got to know a lot of founders and great people. We have also invested in a couple of them. We also started to invest in one fund called Ivor. They have two programs. One is for founders who don't have an idea yet. The other one is for founders with an idea. So this is also really great access for us to really get to really talented founders really early at the journey. And so when we have invested in one other fund who's also like doing super, super early investments. So this is helping us a lot. And we also try to go to more founder focused events in general and watch a lot of lists, for example, when there is a demo day at a university and so on. And it's really, really hard work and it's a lot of work, but it's also quite fascinating. And we want to be like the first ones, so seeing the talent and not being dependent on any like deal sharing or any like lists which go around. I think you also know them and everybody is sharing a lot, but the really good opportunities usually not get shared too much.
And have you taken any exits yet? Let's say from your top three companies.
Not really. We just made a really small secondary. So this was our basic only experience for now. We've come into exit, but I hope I can tell you a lot more when we talk again in 2 or 3 years.
Yes. Yeah. And you know, till now, Europe has been not so active. Like, I think Europe has a lot of wealth, but they never invested in startups really actively. But I see something changing in the last 2 3 years. What do you think has changed uh, in Austria, in Germany, that you observe that now people are more actively investing in startups either within Europe and outside Europe also?
Yeah, I mean, I think back in the days, as I said before, people did not make their money with venture cases and with like anything in that area. If you look at the US, a lot of people work in scale ups. They have made money with investing in startups. They have had an exit themselves, so it's way easier to invest in an industry where you've earned money instead of like maybe having a family businesses and then suddenly starting to invest in a VC fund. So I would say it's a lot of it's a big culture thing, and we also don't have an investment mindset in general in Europe. For example, not a lot of people own stocks. So it's more like having the money on a bank account than doing real estate and buying a private home or something. This was more the go-to way of, I would say, building a wealth in Austria. And so I think this is a big culture shift in general to deploying more money into venture. But I think what have happened like, for example, real estate is just not a too attractive investment market, or a lot of people have made quite bad experience also when you haven't been such a big professional and you wanted to invest in real estate. And this also happened with other asset classes. And suddenly, also when you look into the returns of VC funds in the past 10 years, it's quite attractive. I mean, you also it's not too liquid. I think this is also something that all investors considered. But we definitely saw a push from family offices, also people starting family offices. I think this is also a big step, that you actively want to manage your family's wealth, because a lot of families also own foundations in Austria and also in Germany, which is more about passively managing their wealth, and they also sometimes not even allowed to invest in venture. So there also was some change, but I think this definitely needs a lot of more cultural and also motivational change. And the second thing, I mean, we also don't have too much like government funds investing into VC funds. For example, pension funds could invest more, or any kind of these bigger institutional funds. They would also like add a lot of money and a lot of value to the ecosystem. So we also see some shift there, but it also takes just time.
And what's your perception about India right now?
I mean, actually, I have been thinking too much about India and the Indian startup ecosystem before we two met. And since then, I think we have been thinking and also talking a lot also within the ROI Ventures team. And you have also like gave us some insights. We found it quite interesting that you also say it's quite revenue driven, that you also look a lot into the numbers, especially when you go from a pre-seed round to a seed round. So you really want to see the go-to-market being working, the business model being working, and then you do the next round. In Europe, we just do round by round by round, and then we figure out that that it's not working, or it's working later on. So I like that. I would say, just the way of financing stuff which is working and taking the risk pre-seed. And I also find it quite interesting that I have a lot of second-time founders now starting their next businesses, and that's also a common thing of starting again and do this a next business. And I also think you have a quite interesting ecosystem, because India is just a big country, and I guess when you launch something also being like consumer focused, there's just so many people who could be your potential client, which I find it quite interesting, because we don't have that dynamic too much, especially when it comes to Austria. So I just found the general way of you investing, really looking deeply into the companies, knowing the founders a lot, just focusing on India. I think it's quite interesting, and we also like focused funds a lot. And I mean, being focused on one geographies definitely also helps you to get to the best founders. And I guess also this podcast and all the visibility you have built up within the ecosystem. I would love to have a similar position like you in the DACH region, just everybody knows us and the best founders coming to us. But I guess we definitely need a couple of more years to work on that.
Yeah. And what's your perception about the Indian economy and Indian market? Do you think that, where is India positioned in the world? For example, when you think of ROI Ventures, right? Over a large period of time, how much portfolio allocation would you want to have to India?
I mean, we invested in 2 Indian funds
Yes.
since we figured out Indian is a quite interesting market when it comes to startups and when it comes to venture capital. Honestly, I've been thinking a lot of time only when I thought about venture. I've been thinking about the US, because it's kind of the role model for the world, right, when it comes to VC. And I've been thinking about Europe a lot, because that's a market we invest directly. So that's also where I needed to have the most knowledge. But then we also figured out we don't know, like we don't know if the market in Europe is going well. We don't know about the market in the US, and it's like everything is so related. So we don't want to put too much money just in that 2 ecosystems. And I feel like India, but please tell me more, because I'm definitely not an expert on the Indian economy. It's more like what I heard and what like my gut feeling is. But it's kind of such a big market and such a big economy in its own, and it's so upcoming, and more people also enter a space when it comes to wanting more digitalization. You're super affine with choosing digital services for everything. I just feel like there's such a big dynamic and also dynamic shift, which makes it super interesting for startups to start new businesses and also to scale new businesses. And I also find it interesting because it's it's a big own market on its own. So you can just start out and become successful only doing business in India, which is impossible to only do that in one country in Europe. But please tell me more what you find the most interesting things about the Indian economy.
I think the most interesting thing about Indian economy at this position in the world is that right now India is the fifth largest economy globally at $4 trillion, and India jumped from 10th position to fifth position in the last 10 years. And in the next 3 years, India is going to surpass Japan and Germany to become the third largest global economy after US and China. And China, as we know, is little closed, right? People don't understand China, what going on politically. So that is making India the second most favorable destination globally. Uh, Not just talking about Europe, but even US, right? When US funds are thinking of uh, diversifying, the which other country they should diversify to. For the last, I would say, 20-25 years, all the large US funds were diversifying to China. But now that China's economy is closed and a lot of stuff is happening that people don't understand, like how did COVID originate in China? And there are a lot of theories that China is closing down on their best unicorns. And and what made China today was 20-25 years ago that they privatized the economy, and now their government is saying the government should have more involvement in Chinese economy. So that is pushing China back. Whereas India is taking just the report opposite stand that India should privatize the economy as much as possible, and with a 8% GDP growth per year, the standard of living of people in India is growing really fast as compared to other developing economies. So that makes it a really lucrative destination. The other factor that impacts India and makes it a favorable destination is India has a very robust public market. So every year for the last many years, we have been saying 100 companies go public every year in India, out of which 10 to 15 are startups of various stages. And in India, what you need to go public is that you should be a startup between $20 million to $100 million of annual revenues. You should be doing profit after tax, and you should have some consistency in your results. And Indian markets will value you uh, very fairly.
Super interesting. I didn't know that the that like the stocks markets are being quite stable.
Yes, and it's supposed to be, the stock market will supposed to be growing for the next 10-15 years, till the economy keeps on growing like 8% annually every year. And there's a lot of domestic manufacturing right now happening. The foreign direct investment is growing in India. So a lot of tailwinds have come together at the right place, right time for India. It's now up to the folks developing, the startups developing in India to capitalize that tailwinds. Uh, and India, because of the discipline in the public markets, unlike US market where an unprofitable company can go public and tomorrow, let's say for example like WeWork, tomorrow cease to exist and go bankrupt. In India, it's impossible for a unprofitable company to go public and keep on being unprofitable. So Indian public market, the retail investors in public market really respect the discipline of building your cash flow, building profits, and growing slowly. They don't expect you to grow, unlike US, 50% year on year. So US is still the economy, I would say, for very large outcomes like $100 billion outcome, where a Coinbase or a Uber or companies like these or OpenAI can go potentially public for $100 billion. India is a good market to go public between $500 million to $5 billion. And now India is seeing multiple decacons, profitable decacons, which are startups now come out like Zomato. So yeah, definitely the market, I would say, to keep on consistently being invested in disciplined in a disciplined way for a very long period of time. I would say, let's say, if to any European investor that is listening to our conversation, that if you are allocating $100, uh, you know, please allocate 10 to 15% of that to India, because you will see that grow the fastest over a 10 to 15 year period of time.
I think this is quite interesting, not having that hyper growth, having sustainable growth, which is also more sustainable for investors long term. And it's also bringing quite good market dynamics, because otherwise you always have that investment tourists who invest and then they lose their money and then they go out of the market, right? Which is
Yes.
not that healthy for the market in general, also not from the investor side. But also, like, as I understood it from your investment thesis and also looking at your portfolio companies, I value that a lot. Did you also give the companies more time to grow and to generate revenue? And when they generated revenue, then you can like start the scaling phase. But in Austria and also in, like in Europe in general, we put a lot of pressure also in startups to generate the revenue really, really fast in their journey and just finance them a lot. Maybe sometimes also overfinance them to hire more, to have more people to generate more revenue. But sometimes it's also just a lot about having more time, figuring out go to market, testing business models. And I guess you see that like all along the different companies in their stages until people going public.
Yes. Yes. I think another interesting factor is why India will attract a lot of uh, attention from European investors is, I think there are some cultural similarities there. Like US is a very aggressive culture, I would say, where if a startup raises $10 million and $20 million and fails, it's very okay, which I appreciate, right? The cost of failure is really low. So a founder can go again and start another company and still raise 10-20 million dollars. And in India, and as well as think in Europe, they treat failure uh, with not so much respect. So the cost of failure is pretty high in both these geographies. So for example, let's
Yeah,
say,
it's just also, I guess,
uh,
it's just a different mindset, right? You don't want to fail in India, and
yeah,
maybe you're a rock star if you fail 3 times in the US,
yes,
which just also comes back to the investors. Because I mean, you can do profitable investments with both mindsets. It's just about also the investor's mindset and also the amount of time and also the amount of startups you have invested in.
yeah. And it's very interesting, which I would like to know, right? Why at Roy Ventures you are only focused on B2B SaaS, whereas the largest case studies which have come out of Europe are the B2C companies today.
Yeah, I mean, like as an angel investor, it's a lot about adding value, right? And about showing your position and about having arguments to the founders why we should invest, why we are the right investors. And we see a lot of competitive rounds, and we just don't have a lot of knowledge about B2C companies. And we also have that really big network to B2B companies in Austria. So a lot of times, if we invest in a German startup, for example, it's us getting into the round because we can help with market access in Austria. We have really good connections in Austria, and we just don't have this in the B2C space. So in general, I find B2C interesting. I just don't think we could be really good investors doing investments into B2C. Why are you doing B2B actually?
So for me, the revenue predictability is really important because I have been a founder previously. I ran a company, so I don't want my founders uh, to depend on the Series A and Series B investors for survival. In B2B SaaS is one of the very few sectors where you can keep on growing without raising any external investment, and there's an opportunity to just become profitable through your enterprise clients revenue. Like if you recall, right, Microsoft is one of the largest companies which is purely B2B essentially, and they never raised any money. uh, so we have so many case studies in B2B where companies raised the least amount of money and became very large, and just on the basis of the revenue, not because on the basis of funding.
Which also gives you more security and more control as a pre-seed or early stage investor,
Yes,
which makes total sense. I mean, it's a lot about like also spending on marketing and also like being quite competitive in a lot of B2C cases because it's also harder to differentiate. It's just about differentiating with like marketing spend and community. And in
yes,
the best case, you have built a really good community, which also helps you having your USB. So I think it's just a completely different dynamic, and I also really like your perspective on long-term profitability and also survival rate.
yes, yes. I think the kind of DNA required for B2C investing is you need to be okay with a very large failure rate. I think I don't have that DNA. And in B2C, what you need to be okay with, even if you have large winners, a unicorn can also fail. We have seen it happen multiple times, right? A WeWork can fail, or any B2C company uh, which is large enough can fail if they are unprofitable and if they are not able to raise a round at even at $1 billion valuation. In B2B, it's really hard to fail unless and until you screw up as a founder. Like for example, let's take the example of Clubhouse. Clubhouse couple of years ago was so
Mm.
popular across the world, and now nobody hears of Clubhouse. I wonder what has happened to the investors of Clubhouse. They had raised, I think, $2 to $3 billion.
Yeah, it's insane. I mean, there were other examples like that, like Hopin, for example, which was a quite big event
Yes.
platform, also raised a big amount of money. Yeah, I mean, but like usually we see funds like Index, Sequoia, and like the really big funds, they also back those companies. And I guess they will also just have some winners and some losers. And in the end, if you look at their fund returns, it's still insane. So I figured out maybe they could just, still be okay having this big losses in the portfolio. But I think this is also a space where like retail investors and smaller investment funds just keep their fingers away from, because the probability of losing huge amounts of money is just higher, I guess, than in other sectors where it's more about profitability, finding your client base, and so on.
Absolutely. And B2C is also a flavor of the market. So a couple of years ago, crypto was very hot. Today, crypto is not so hot, right? So what do the investors do that invested in crypto? Or for example, 3 years ago during the COVID time, uh, edtech was super hot. Now nobody cares about, you know, edtech, uh, unless and until you are a company that is giving spectacular user growth or revenue growth. So the flavor in B2C changes very rapidly.
Yeah, that's true. I think if you want to do B2C, if you have a lot of experience in that space, if you have a big network, if you maybe like coming yourself being an influencer, having any kind of special knowledge, also when it comes to disregards or unfair advantage, I think it still makes sense to start out. And there are a lot of like amazing customer businesses, also quite successful ones. But for us, and I guess also for you, it was just not the right fit.
Yeah, not the right DNA. Also, what I've seen, the common among the common, how do you categorize a good B2B investor and a good B2C investor is a good, usually B2C investor will largely come from a very large B2C startup. Uh, for example, like Deliveroo or Uber or something like Coinbase. Because why they would be successful? They would have access to the network of the people who are starting again from these large companies.
Mm.
And in B2B, the kind of DNA that makes a successful investor is somebody who has large enterprise connects. So they can constantly validate with the enterprises what is the problem that they have, what are the solutions they are looking for. Uh, so both require very different skill set, very different DNA.
Definitely. And I mean, that's always the thing, why you start a B2C company, why you start a B2B company, which investor is the best fit, which are your clients. And I think there's like so critical questions for an investor and for a founder who's like the basis, the foundation
Yeah.
of starting a company. And I also don't like if founders start like random businesses. Like, I wanted to start a business, I've evaluated 10 ideas, and that's why I started this one. It's way more about that. As you said, it's about like which connections can I leverage, how can I build an unfair advantage. It's not just about a potential market needs. Others could identify as well.
And Laura, one thing that I would like to ask you is, between the four partners at Roy Ventures, how much of your capital have you allocated to startups or private markets?
Yeah, I was talking about this morning with my husband actually, and we've calculated this a little bit. I mean, right now we have around 15% of our total capital allocated in startups and also allocated in VC funds.
Yes.
But this is just the beginning, right? So the more we invest into this asset class, the more diversified we get, and the bigger we can like invest based on our total portfolio. So we want to definitely continuing investing a lot directly into startups, and we also want to expanding our fund portfolio. And we've been thinking about like adding this up to 50% of our total portfolio long term, keeping in mind the diversification we have also gained within one asset class at one point.
Got it. And if you have to split it geographically, right, between just your private portfolio, how much of it would be Europe, how much of it would be US, and how much percentage of it would be India today?
I think we would like do all our direct investments just in Europe because, as we discussed about being an
Yeah.
investor, so I think we will have like 50% of that 50% being allocated in Europe, and then I think we will spread out the rest, focusing US. I hope we can also like do more in India.
Yeah.
And because, yeah, as you said, it's just super attractive for market. Also, when we look at the growth potential within the country, we don't have that in Europe, we don't have that in the US. So if you want to have really big returns, and I think you also made that super clear today, it's quite interesting to also think about investing more into India. So also keeping this in mind, but at the end of the day, we also have a family office dynamic. So whatever is interesting, and we also need to take a look at the interest rates and so on, and about other asset classes. So I think this is also quite interesting for us being an investor, just evaluating different kind of asset class all the time, and always thinking about, okay, is venture the most interesting asset class we can invest in right now? Is there other things which are more upcoming? And I think I can tell you now what we're going to do the next years. And also when we look back at the markets the last 5 years, I mean, they were super crazy. So I hope everybody constantly reevaluated his or her investment strategy all the time, because I think that's also the most important thing you need to do right now, being an investor, also being a founder, of course. Just don't stick to your plan, please replan whenever there is a change, and monitor the market, get feedback from clients, from investors all the time. And I think if you want to win this, you really need to be agile and on top of things.
And right now, what are the questions that other family offices, which are not so deep into venture like you, ask you often?
When do I get my money back? I
Yeah.
would say that's the most relevant question. We also get asked a lot, like how big the percentage should be investing into venture, and we also get asked a lot how to directly invest in startups. And I think we both know it's super hard to do direct investment. That's not something for starters. So I get that question a lot, and I also recommend usually to just invest in funds for now. And then I got asked a lot which funds to invest in.
Sure.
And I see a lot of family offices investing quite locally, which I don't like too much. So I see a lot just investing in fund managers they have known for years and they trust that person. But I think it's more about trusting. It's more about thinking about diversification and returns. So I think there really still need a quite big shift of more family offices looking at that from a geographical, broader perspective. I also know others who just would do VC funds in Europe or just in DACH. And I think it's so easy. I mean, it wasn't a difficult process, right? Us investing in you,
Yes.
especially using AngelList. So it's super easy also when
Yes.
it comes to like doing the legal things and everything. So I hope this also becomes more common for European investors to look outside the European market, especially when it comes to fund investments.
Yeah. And what are the kind of, let's say, one is they are asking, when do I get my money back? But are they asking what kind of IRR expectations or returns percentage year expectations should they have from venture as compared to other asset classes?
Yeah, definitely. I mean, that's like the second big question, right? It's always about return perspectives, liquidity, and about risk. And I think, especially being a more conservative family office, you think a lot about these three things in combination. Also comparing that to the asset classes you have already invested in, and then usually it's coming back to the founder of the family office, like what's like his intention, how much risk aversity there is in the founder's family, what's their general perspective with growing their wealth over generation. So I think that's a lot of the time the case. I feel like whenever somebody found a family office and made the money having a venture, having an exit, it's a no-brainer for them, they would invest a lot into VC and into startups. It's kind of logical step. That's why they start the family offices. But like with that old school family offices, it's not too common. I think most of them have started to invest in VC funds, but I guess they could allocate way more.
Got it. No, thank you so much, Laura. It's been an amazing conversation today. I learned so much, and I believe my listeners learned a lot about from you today on how Europe is a market, how Austria is a market for investing in startups and in venture capital.
Yeah, thank you so much, and looking forward to also welcome you in Vienna in a couple of
Thank
weeks,
you.
so we can even go deeper into this conversation.
Thank you so much. I appreciate it.
Perfect. Thank you.